The next likely Chancellor of Germany plans to ease the country's debt limit so it can spend more on defence. Germany's fiscal discipline goes back to its post-war reconstruction. Its so-called debt brake is more recent, adopted in 2009. Under the brake, the annual deficit is limited to 0.35% of GDP. A proposed reform would exempt certain borrowing. Most of it would go towards an infrastructure of more than $500 billion. Defence spending above a certain amount would also be exempt. German investors cheered the potential. The DAX closed more than 3% higher. Carsten Brzeski is the chief economist for ING. This idea of eliminating the debt brake in certain circumstances, I mean, every finance minister is in some, I mean, we saw it with the Chancellor of the Exchequer, shifting the goalposts to sort of say what is legitimate borrowing versus illegitimate borrowing. But this is different for Germany, isn't it?
This is extremely different because the last finance ministers had somehow been kind of beacon of austerity for Germany. So we've never had any finance minister since the debt brake was introduced who really argued in favor of more spending. This is historical. This is really a complete U-turn because it also means that there will not only be more money for defense
Right.
spending, but also this 500 billion euro investment fund for infrastructure is unique because it means that Germany finally will want to close this big investment gap that has been piled up over the last decade. Because there are estimates going for 600 billion investment gap in infrastructure built up over the last 10 years, and this is now finally being resolved.
So we've seen other countries. I mean, obviously, the US with its Infrastructure Act did it, and the UK's had a bash at that, and indeed the EU has got its own plan. But on this defence spending and all these other bits of spending, you still need somebody to pull it all together. This is the difficult part with Europe. Everybody's spending more, and we've seen defence stocks rise sharply. But how is it coordinated if NATO is not to be the leader?
Well, I think this would be then up for Ursula von der Leyen and the European Commission. And this is also why European leaders are meeting this weekend in Brussels, because I think the time currently is not ripe yet for really something like a European defense fund, where we would have European borrowing to finance really defense. So this will go national again. And I guess that then the European Commission has already kind of paved the way by saying that national member states will be allowed to run higher deficits if it is for the sake of increasing spending on defense.
Donald Trump has implied, said as tariffs are coming, let's assume that they do arrive. European growth is already weak. Will tariffs push the economies into something approaching recession or further?
We have so many kind of moving pieces right now, Richard. It's very hard to tell whether if tariffs come, and I think they will come, whether this would be enough to really push the European economy into recession. If, on the other hand, we will now get this confidence boost by these fiscal stimulus announcements coming out of Germany. So these are really going into kind of opposing directions. The only thing is, yeah.
Yeah, so on that, I've been reading various articles suggesting people like you are basically throwing your papers on the floor and saying it is impossible to make reliable, credible economic models out of the data and things that we're hearing. We just can't do it because we can't get the right information.
Currently, it is impossible because things are moving so fast. I think what the tariffs mean that the U.S. economy will become even more attractive, also on the back of deregulation in the U.S., lower taxes in the U.S., already lower energy prices. So the taxes could be a stick to push European companies further to the U.S. But now, if we really get this counter movement by infrastructure spending in Europe, by more defense spending in Europe. This could then again pull back European and also foreign companies to stay and to continue staying in Europe. So this is really, we are really living in very interesting times right now.
Carsten, I'm grateful. There'll be more interesting times and we'll talk more in the days and weeks ahead. Thank you, sir.